Good morning, everyone. It's Sunday, and I'm here with a new week objective. I'm going to explain you what are my objectives for the new week coming. Saying that, we jump into the daily chart, the weekly chart, and over here you can see that I we have traded all the way up from the beginning of April, and now we reach to these levels over here that are weekly CB over here, and as I highlighted in yellow, we can we can see that the previous week we had traded to the low of the weekly CB, but we couldn't go inside the inefficiency and we traded back. Also on this week over here, that was my point of interest. I measured the week and I highlighted the 50% of inefficiency over here from the week and extended to the right. We can see we traded a little bit above with this week in the previous week, and we rejected to go higher and we traded lower. On the other side, this week over here was my other interest for the previous week that I measured, and you can see the market has traded back to this week in discount and reach a little bit around 4 handles below this consequent encouragement, and after that with a very nice reaction we traded higher. Saying that, we go to the daily chart that you can see the levels from the weekly. As you can see over here, this dashed line in red and the consequent encouragement of the weekly inefficiency in light yellow. Also on the daily chart, I highlighted this swing point over here as a daily buy side liquidity, but based on the things happened in the current and in the previous and the week before that, I'm going to have a little bit different views over here. So now on the daily chart, we can see that this inefficiency over here uh, from March over here, we have a daily CB formed and we traded up into this. We tried on the previous week to go out of the CB, but we failed and we traded lower. We respected the consequent encouragement of the daily CB. After that, we reached to this small daily BC formed in the beginning of May, and we had a very nice reaction after touching the low of the daily BC to trade higher. In the Thursday and Friday, you can see we traded above the volume imbalance in daily chart, but we failed to close any body of the candles above the consequent encouragement in the daily chart. Now we jump into the hourly chart to see the inefficiencies over here and how the market has traded before. On the hourly chart, we can see we have a relative equal loss formed over here in the previous week. You can see over here the market has traded going lower. We reached to the daily BC and the consequent encouragement of the weekly candle, all right. After that, we traded higher and jumped into the daily volume imbalance over here after clearing the buy sell side liquidity below these candles over here in the 1 hour chart. We traded higher. We created this 1 hour BC over here. We traded back into this fair value gap, and after the opening bell, we had traded higher to trying to reach the weekly CB low. By this run, we had created the 1 hour fair value gap called BC. And as you can see on Friday trading, we were spending most of the time before opening bell in the lower half of the hourly BC over here. At 7, we had a little gyration and volatility in the market, clearing both sell side and buy side liquidities. And after that, with the opening bell, we started trading lower and going below this Asian's low from Friday trading session and jump into the daily volume imbalance high. So after that, we traded higher a little bit and but still stayed in the lower half of the hourly inefficiency. So we are now jumping into the 15-minute chart to see more detail about this. On the 15-minute chart, you can see that I measured this candles wick over here and I highlighted the 50% or consequent encouragement of the wick. So I extended this to the right and you can see the market had traded twice with the wicks through this consequent encouragement point, but it failed to close any candle's body above or around it and respected also the 15-minute and hourly inefficiencies. You can see all the candles body are resting around the high of the 15-minute fair value gap. After that, we had a very nice lower after opening bell to the daily volume imbalance high that created this wick over here. I measured this wick. I'm interested in this wick actually because this is the largest wick among all of the wicks over here. So I highlighted this and you can see by all the candles in this 15-minute charts are respecting the upper portion of the wick, that is our inefficiency. It is true that we had some wick going through that and traded into the lower part of this inefficiency, but the bodies are respecting the lower half and closed above the 50% level. Now we jump into the 5-minute chart and you can see even in the 5-minute chart the bodies of the candle are all respecting the hourly inefficiency as well as the wick on 15-minute chart midpoint. And you can see also I highlighted these relative equal highs on the 5-minute chart and these equal lows on the 5-minute chart as our liquidity pools. Now we have traded all the way over here and after in the last hour of trading you can see the market was gyrating and staying in the lower half of this 1 hour inefficiency. Also if you pay attention from the beginning of Friday's trading, most of the time market was gyrating in the lower half of this 1 hour fair value gap and created a little bit run higher in the top portion of this inefficiency, but again very fast started going lower to the lower half of this inefficiency. In the 1-minute chart, you can see that we had cleared the minor buy side liquidity above this relative equal highs over here by this run going higher, tapping into the 15-minute CB, and after that rejection going lower to the low of the hourly BC and staying around there because it is after 4 p.m. and the market was gyrating and doing nothing special actually. But another point that I wanted to mention from this 1-minute chart is I have measured the range from this high to this low and you can see the midpoint and quadrants on the chart. And most of the time you can see the price was staying in the lower half of this range over here from this high to this low. So this is another reason that helps me to conclude for the coming week we are going to have a bearish week based on the thing I told you from higher time frames, from weekly and daily, and hourly time frames to this 1 minute chart, we have all the evidences to show the price starting going lower for the coming week. Now, I would like to thank you for watching this video, and do not forget to put your finger on the like and subscribe buttons. Daddy Trade Pie on YouTube is always available here with live trading during the week. And till talk to you next time, happy trading and happy Sunday.